Have you ever wondered how some people seem to build wealth so easily while others keep struggling? Well, today I'm breaking down 5 investment tips from one of the smartest voices in finance, Mark Tilbury. These are not complicated strategies. In fact, beginners in the USA can follow them right now and start seeing real results. But here's the twist. Most people miss the simple steps that make all the difference. So stay with me till the end, because the last tip might change how you invest forever. Mark Tilbury isn't just another YouTuber giving advice. He's someone who turned his own financial struggles into success. He shares investment strategies that are practical, realistic, and easy to follow, especially for beginners. What makes his approach unique is that it's not about quick wins, but long-term habits that actually work. His advice is rooted in experience, which is exactly what you need when starting out. So let's dive deep into his tips and see how you can apply them starting today. The first thing Mark Tilbury stresses is starting as early as possible, even if you only have a few dollars. The earlier you begin, the more time your money has to grow thanks to compound interest. It's not about being perfect or having tons of cash. It's about making consistent moves. Imagine what just $50 a month can turn into over 10 or 20 years. It's way more than you think. So ask yourself, what small amount can you start with today that you'll stick to for years? Most people think investing only makes sense when they have a lot saved up, but that's far from the truth. Mark Tilbury reminds us that time is more powerful than money when it comes to investing. A small amount invested regularly beats waiting for the perfect amount or timing. Plus, habits formed early will carry you through bigger investments later. So why wait when every dollar now could be a step towards financial freedom? The second tip Mark Tilbury gives is to automate your investments so you don't even have to think about it. Setting up automatic transfers from your checking account to an investment account takes away the temptation to skip months or spend the money elsewhere. It's like paying yourself first before anything else. Over time, this makes investing effortless and builds discipline without constant reminders. What could you do if you didn't have to worry about remembering to invest every month? When your investments happen automatically, you start to treat it like any other monthly expense. That's the magic of automation. It takes the emotion out of money management. Without the stress of timing or motivation, you build wealth without feeling like you're sacrificing. Even during hard months, the money goes in and the habit sticks. Can you imagine reaching your financial goals without having to constantly remind yourself to invest? Mark Tilbury's third tip is to keep it simple with low-cost index funds rather than chasing the latest hot stocks. Index funds track the whole market, so you're investing in a range of companies without trying to pick winners. The lower fees mean more of your money stays invested and grows over time. Plus, they're less risky because you're spreading your investments across many sectors. Isn't it smarter to let the market work for you instead of trying to outsmart it? Beginners often fall into the trap of buying stocks they hear about without understanding the risks. Index funds remove that guesswork because they're built to mirror the market's performance. Over the long term, the market has always gone up, making index funds a safer and smarter way to invest. It's like riding the wave instead of fighting it. What if the best way to invest was simply trusting the system rather than outsmarting it? Fear and FOMO, fear of missing out, are the biggest enemies of a beginner investor, according to Mark Tilbury. Many people panic during market drops and sell at the worst times. Others jump on trends without knowing why they're investing in the first place. Tilbury emphasizes sticking to your plan and ignoring the noise. So, how do you build the confidence to stay the course when the market gets shaky? The biggest mistakes in investing aren't about strategy, they're about emotions getting in the way. When fear strikes, people stop investing, miss out on rebounds, and lose momentum. On the flip side, chasing trends leads to risky bets that burn through savings. Tilbury teaches that understanding how emotions affect your decisions is half the battle. What if you could train yourself to stay calm and focused no matter what happens? The last tip from Mark Tilbury is to never stop learning and adjusting as you go. Even seasoned investors read, research, and watch markets regularly. The key is to stay informed and adapt without overthinking every change. Tilbury says learning helps you build confidence, make smarter choices, and spot opportunities before others do. So, what steps can you take this week to improve your financial knowledge and invest smarter? Investing isn't about luck. It's about making informed decisions based on what you know. The more you learn, the better your strategies and reactions become. Mark Tilbury believes that learning doesn't have to be overwhelming. Start with small, trusted sources and build from there. Over time, you'll feel in control rather than lost or anxious. What would it feel like to finally understand how your money works and use it to create the future you want? Mark Tilbury points out that most beginners fail not because of lack of money, but because of lack of discipline and knowledge. They either wait too long, invest too emotionally, or get distracted by flashy tips. The ones who win are those who stay consistent, automate, and keep learning without getting caught up in trends. It's not about being perfect, but about staying on track over time. So, are you ready to take control and build wealth the right way? Tilbury's philosophy is built on celebrating small wins and letting them accumulate. Even a $20 increase or sticking to your investment schedule can feel like progress when you track it over time. These small wins build momentum, making it easier to stay consistent and feel motivated. Before you know it, what seemed like small efforts turn into life-changing results. How empowering would it be to look back in a year and see how far you've come? What happens when the market crashes? Tilbury's advice is simple: stay invested and view it as an opportunity. Market drops are temporary, and history shows markets recover and even hit new highs. Panicking and pulling out means locking in losses, while staying calm lets you benefit from future growth. Tilbury teaches beginners to prepare mentally before downturns happen. So, what mindset shifts can you make today to handle tomorrow's market swings? Mark Tilbury is clear that investing isn't about getting rich overnight. It's about patience and persistence. Unrealistic expectations lead to frustration, while steady progress builds lasting wealth. He advises focusing on achievable goals and celebrating each milestone. When you know what's realistic, you're less likely to burn out or chase high-risk bets. Are you setting goals that challenge you, but are still within reach? Before investing heavily, Tilbury always recommends having an emergency fund to cover 3 to 6 months of expenses. This safety net protects you during job loss or unexpected costs, preventing panic withdrawals. It's like having a backup plan so you can invest without stress. Once your emergency fund is set, you can invest more confidently and stay committed long term. Do you already have a cushion that allows you to invest without fear? Many beginners get stuck trying to time the market or pick the perfect stock. Tilbury says that consistency is far more important than perfection because small, repeated actions add up over time. Even when you feel unsure, showing up month after month makes the difference. Investing regularly builds habits that eventually lead to automatic growth. Isn't it better to stay steady than to wait for the perfect opportunity? Mark Tilbury advises reviewing your investments once or twice a year to keep them aligned with your goals. Life changes, market shifts, and new opportunities mean your portfolio should reflect where you are now. Rebalancing doesn't mean overhauling everything, but making small adjustments to stay on track. It's like fine-tuning rather than reinventing your whole approach. When was the last time you checked if your investments still match your dreams? Tilbury recommends using simple tools like apps or spreadsheets to track your investments without obsessing over daily changes. Setting clear goals and tracking progress periodically helps you see how far you've come and where you need to improve. The goal isn't to control the market, but to stay aware of your financial habits. Tracking builds confidence and helps you stay disciplined without getting overwhelmed. What small tracking habit could you start today that keeps you focused but stress-free? Having a financial plan is like having a roadmap for your investment journey, according to Tilbury. Without it, you might drift from goal to goal without seeing real progress. A simple plan helps you decide how much to invest, where to invest, and what your long-term objectives are. Tilbury's approach makes planning accessible without overcomplicating things. How would a clear plan change the way you invest and feel about your money? Mark Tilbury points out that most mistakes come from impatience, ignoring risk, or following trends blindly. Beginners are often their own worst enemy by letting emotions dictate decisions instead of strategy. Knowing common pitfalls in advance can save you from making avoidable errors. Tilbury encourages learning from mistakes and not being afraid to ask questions when unsure. What mistakes are holding you back, and how can you avoid them starting today? So these are the 5 investment tips from Mark Tilbury every beginner in the USA should follow. Start small, automate, invest in index funds, manage emotions, and keep learning. It's that simple, but powerful. It's not about perfect timing or huge sums of money, but staying consistent and informed. With these steps, you'll build a strong foundation and see progress you never thought possible. Which tip will you apply first to kickstart your investment journey today? If you found these tips helpful, don't stop now. Check out our playlist on investing for beginners to learn even more strategies step by step. We cover everything from setting goals to advanced money management techniques that will make you feel in control of your finances. Hit that like button if this video helped you, and subscribe to never miss actionable tips that actually work. You've got the knowledge now. It's time to put it into action and build the wealth you deserve. Click on the video next to this one to keep learning and growing your financial future.